So I think we all agree with the concept of RWAs being an unbelievably massive opportunity, but some of the most relevant data points actually say that we're still in the very, very early, probably few first pitches of the first inning. McKinsey in 2021 said there's roughly 520 trillion in global basically capitalization. That's real estate, assets, et cetera, et cetera. But if you look specifically and you remove stable coins, right now as we sit in tokenization, RWAs only make up about $12 billion. So 500 trillion, 12 billion, there's a pretty big delta in there. So where do you think we go with real estate to start and then the other layers as we start to build the pyramid of what tokenization can truly look like? That's for anyone.
I can start with this. Something to understand where we're going with real world assets, I think we need to have some perspective on where we've been. Cryptocurrency has always been a grassroots operation since the inception of Bitcoin, early Ethereum ICOs, everything like that. So, real world assets didn't exist prior to 2016, 2017 when Tether came out with their dollar peg stablecoin. So, before that, if some of you OGs remember, altcoins were priced in Bitcoin. So you'd have that 0.000005 pricing for everything before stablecoins came. Then after 2017 with ICOs, things were priced in Ether terms. It wasn't until 2020 and DeFi summer when things were started pricing USDT, Tether, and then the beginning of other backed stablecoins. But where we're going from here, and an interesting thing that's been happening recently, is major stablecoin issuers, Circle, Tether, and a few other companies starting them are starting to buy U.S. Treasuries. So that becomes a very profitable business, especially with rates being higher than they have been historically in the past. But then, grassroots wise, we're seeing people create real world assets with their NFTs, fractionalizing art, or selling expensive watches on chain and getting loans and collateralization for that.
Yeah, the only thing I would add to that is if you remember, if you got interested in Bitcoin, let's say in 13, 14, and you looked at it and said, hey, I don't know about this Bitcoin thing, but at the end of the day, the blockchain technology I know is going to solve a lot of problems for the world. And you believed in that. I believed in that. It wasn't necessarily I believed in Bitcoin, but I thought this technology is unlike anything I've ever seen since the internet. And there's no doubt that it's going to integrate into everything. And you fast forward another 10 years and you look to where we are today, it's sort of when you look at real world assets and you look at tokenization, it's one of those markets that is inevitable. It is inevitable. Just like you can't name a software that solves problems that is you're not using today. Nothing that's been invented that's actually a really strong innovation died. Innovation that's acceptable in technology always succeed. So blockchain will end up integrating with everything, especially real world assets. Everyone's just waiting on a little bit of regulation, and they're also waiting on the first mover, right? So let's say that Hermes is the first mover on physical goods to attach an NFT to all their bags to validate its authenticity. There will be a first mover, and then everybody else will follow, and it'll move very, very quickly. But everyone's kind of waiting from the high end side of it for regulation. I give a lot of credit to Propy, by the way, for being a first mover in the space, not just because this is their conference, but it takes always someone to do something before it's really needed just to set the groundwork and to create a pathway for everybody else to join. And I am a firm believer that they are kind of creating the first steps into what is inevitable.
Thank you. I like this promotion. I totally agree with you. Um, Not only on Propy side, but also on how the early days of this blockchain craze was blockchain will solve absolutely all problems, just like we think now about AI, right? Um, and truly shifting from just speculation use cases for Bitcoin, which is a store of value, and a lot of coins. Right now, we have probably about 15,000 or 20,000 circulating coins. And then we needed those 10 years to shift from the most important application, which is money and store of value, that is Bitcoin as a standard, to more real life use cases, such as real world assets. And to your point, Luke, I think the better yield generating treasuries really got us to this level of institutional investors that are uplifting those companies like Maple, Centrifuge, Block Tower, that are developing and providing a better rails to have this RWA as an asset that generates yield in a seamless way and in a crypto native way. But of course, I'm very excited about other use cases, like you mentioned. There is music, real estate. So what else are you seeing besides real estate, besides music?
I think LVMH has done a great job. And also Tiffany and Company, they did a platinum CryptoPunk pendant for CryptoPunk holders. Probably the only big company that's doing something that's also crypto native. So it's not people coming from traditional finance into cryptocurrency. It's guys who started with the CryptoPunk mint when they were effectively free in 2017, and now we're turning it into fine art and jewelry. So that's another thing I think digital artists will start coming, or artists will, and digital artists will start primarily putting their art on chain. And then once we see other forms of that in the blockchain world, whether it's treasury issuance or other debt, loans, and eventually, municipal bonds, things like that.
Yeah, it's almost any asset. Think if you're a museum and you have a curated selection of art and you need to raise money for the museum, you have your donors, et cetera, but you could have, let's say, 20 pieces of fabulous art that you make an agreement to sell in X number, X period, or X date. And you could, tokenize that asset, sell that asset, raise money for the museum, have a future date. That asset could be transferred or traded, and then that asset eventually sell. So you can take that idea for any museum that needs to raise resources for capital improvement, et cetera, and you can apply it to 1 million other institutions within the world. And that's what tokenization will end up doing to real world assets. And everyone's wondering, why not now? This makes up so much sense. Same way 15, 10 years ago, I thought about blockchain, and it will have everything to do with regulation and then first movers. It's going to happen. It's inevitable. So positioning yourself as an investor in areas that you feel are going to prosper from it is really important, in my opinion, right now.
So everyone's said blockchain so far, and obviously foundationally that's what we've been talking about. It disrupts traditional players. I mean, there's no intermediate. So using that as a primary thesis, like where do you see things going in the next 5 to 10 years as we have the opportunity to basically disrupt traditional finance rails and go peer to peer in a way that we've never been able to do before? And specifically, how do you see that reshaping global markets, which I believe fundamentally it will, and in a pretty massive shift?
I hear the word blockchain thrown around quite a bit. And as a crypto native, I sometimes challenge people to define a blockchain. That's a hard question to answer. For me, I follow Paul Stork's definition of it. He has a blog called truthcoin.info, fabulous mind in the cryptocurrency world, which is cryptographic signatures plus a clock, which is very technical, so to speak, but he also talks about public chains versus enterprise blockchains, things that are more private. I believe that blockchains should be public utilities like subways, buses, or language, where people have certain slang, but we all share a common language. So in shaping the future markets, you have to have the blockchain trifecta: security, scalability, and throughput of transactions. So I think Bitcoin was the first one to do a first blockchain. Ethereum has done a great job in decentralizing over the past several years. And then Solana is well on its way. And there are a few others that are coming out that are doing well with that. But I think that is the way to view the lens of blockchain: is it a public utility that is decentralized, or at least moving towards it?
That's really an important clarification. And in the early days when we've just launched Propy, there were so many conversations with title companies and institutional players that were all pushing for private blockchains. But there is no such conversations anymore, which is amazing. We do need a permissionless public service rails for this innovation to move forward. So thank you so much for clarification for the audience, especially for those who are not very familiar. That was important.
Just by point of reference, the largest blockchain project in the world ever built was Onyx. which is JP Morgan Chase's. And right now they're in their test phase and they're moving about $2 billion a day in value. So I agree wholeheartedly. It should be open trade routes, basically. And the idea that these large corporations will come in and privatize it, that's great for their own internal ecosystem. But for a real RWA explosion or the opportunity and the thesis to really advance, it needs to be on these public rails fundamentally. So one thing that I've seen, especially in non-real estate RWAs, is massive price volatility. How do we address those concerns, or is that just part of the experience that in these nascent earlier days we're going to have to ride the wave, if you will?
Yeah, I think that's an easy one. I mean, there are very few markets that have ever been established where at the beginning of them don't have massive volatility. I mean, anything that you've watched grow over any period of time, the inception of it was incredibly volatile. I mean, people laugh, but they use the word in crypto price discovery. Oftentimes, because there might not be any revenue and they're trying to figure out what it's worth only based on demand and supply. So you have incredible volatility. And it really is only based on the belief in something. So I don't think you're going to get rid of that. And I think that if you look at some of it, though, and some of the longer term assets in crypto, the range has really shrunk. And then if you look at brand new ones like meme coins, you'll see a giant range.
Cryptocurrencies also are as much psychological and social as it is technological. So I think the big vicissitudes of volatility are actually an advantage, specifically early on, because you think of the run in 2014 and then the run in 2017 and 2020 and 21. More and more people come into the space after these insane run-ups. A few of them die off in the bear market, but it's actually an advantage. And one metric that we watch at our fund that's an interesting one is Tether Treasury issuance. So just yesterday, I think $2 billion in USDT was minted. And we've seen in the past that when that happens, it takes a little while for it to flow through to buying new coins, Ether, Solana, Bitcoin. Uh, but that's a key metric to watch, especially in real world assets.
But also, it just want to, if you look at the market since the crypto crash, which currency or which crypto had the least amount of volatility? Bitcoin, right? And so, which was the first ETF? Bitcoin. So you're seeing the assets that get the greatest amount of credibility almost based on volume, et cetera. But if Bitcoin, I would argue, was middle of the road in volatility, it would have never had an ETF. It would not be Bitcoin. It wouldn't be a store of value. It would be just like every other crypto. So eventually, and the next one will probably be Solana. Eventually, those that have the greatest credibility will integrate into our normal financial system.
And then there we will witness less volatility in those assets like Bitcoin, because bigger players with a lot of capital will not be able to move these billions of dollars in a day or two. The other question, I want to come back to real estate. And I think the $500 trillion opportunity is achievable if one day, which probably what you mentioned to be inevitable, if we bring the $300 billion real estate market on chain, do you think it's achievable?
I do for sure. I think that it will probably. I mean, you're doing some of the major steps to show people how it's done. So you're sort of putting together the instruction manual. It might not be exactly what generates the greatest amount of capital. What generates the greatest amount of capital might be commercial, and that might be how it's introduced, and that will kind of validate your thesis. And then with integration with regulation with title companies, because the problem is you have so many different laws in different municipalities around the country, getting anything done through title that can scale quickly is impossible. So until some of those things happen, you won't be able to see that growth, that inflection point where it becomes what's expected instead of novelty. But I think it's inevitable that it will happen, whether it happens in, you know, 2 years, whether it happens in 5 years, I'm not sure. But I still think, even though we're at the beginning of it, you're at this point where you're just waiting on other things to change so you can take off.
Absolutely.
Well, just because it was at Luke's behest. Go ahead. No, you wanted to do price predictions.
I was going to do price predictions and hot takes for everyone. All right. So A few things. I think that, and then none of this is financial advice, by the way.
That's a blanket statement for all 4 participants.
So I think Solana outperforms just holding Bitcoin and Ether this cycle in the same way Ether outperformed in the last cycle. I think Solana is the next token to get an ETF. Another thing that is going to be a humongous trend next year is meme coins, and I think with that also NFTs. That this portion of the market and new things in cryptocurrency are more EQ than IQ. So you have to find things that are cults and crypto natives follow. Maybe even ask your kids or people who are more into cryptocurrency about them. My profile picture on the screen there is a Pudgy Penguin, which is an NFT project. A guy
It's
named
Luca.
Luca Nets, Miami guy. So that's a great one. We also like Milady, which is another kind of cult coin that's an NFT, and then also CryptoPunks. And then in terms of meme coins, there are several good ones out there. We like SPX is an interesting one. Giga Chad is interesting. Harry Potter Obama. If you haven't heard of that one, that's one to check out.
Any on base?
On base, yeah. Harry Potter Obama is Ethereum based. And then another big trend is going to be crypto AI, and the project that I'm most interested is in BitTensor. It gives me the similar vibes to what Ethereum was in 2016, 2017, where the opportunity is massive, but the it's still in its infancy. So those are the things.
I'll add 2.
Okay.
So Beam used to be Merit Circle. It's a great way to get invested in crypto if you enjoy gaming. And there are a lot of people that believe that gaming will be the first integration of blockchain and crypto, or the biggest, fastest growing in America, possibly. Another one is entertainment, TV, which is now computer, which is Dream Machine token. If you look there, they're doing a lot of innovative, creative things. They're generating a lot of followers, a lot of cool content. But if you want to invest in those 2 verticals that are integrated with crypto, I would say those 2 are you have to have a stomach for it, though. This is not money that's for your kids' education or new crowns. This is for flyer investment, the 5-10% of your investment that you want to put in a risky asset, and you're okay losing it, but you can have some enjoyment with the volatility.
Another thing, if you want to hear more, you can follow Cosmo Capital on Twitter or email me at luke@cosmo.fund and I'll get right back to you.
So that's the Vegas money prediction. So play around. All right. Thank you, everyone. Great panel.
Thank you.
Yep.